Um, Good evening and welcome to our hour on homeowners insurance. My name is Melanie Light and I'm with the via Farallon Cuesta Firewise group. And we are really happy to have our guest Joel Laucher here tonight. I'm also going to record this and send out the link through to all the Firewise leaders who can then send it out to the people in the community. So there will be that. And in addition, the Orinda News has asked me to do a summary of this meeting for the April edition. So there will be that as well. Yeah, we wanted to, our Firewise group thought it would be really helpful to do this because we are all so impacted right now by homeowners insurance. We're either getting non-renewed or our premiums are skyrocketing, and the industry is in serious trouble, not only here but across the country because of all the climate-related disasters. Wildfire losses wiped out decades of profits in the 2017 and 2018 fires. I think they lost 30 years of profits. I'm sure Joel has the exact number, something like $30 trillion or some insane amount of money. And anyway, but as much as our premiums are shooting up, weirdly, insurance premiums in California are not as high as in other states because of Prop 103. So I guess that's some minor comfort. But nonetheless, 7 of the top 12 insurance companies have left or pulled back. So it feels to me like we're all just sitting ducks here. Either your premiums have gone up or you've been non-renewed or you're just shaking in your chair waiting for the other shoe to fall. We were non-renewed and now we are on the FAIR plan, the California FAIR plan, which I'm happy to share about, but I know Joel is also going to talk about that. It turned out not to be as expensive as we thought. One of the things we did, though, is we raised our deductible quite a bit to bring the cost down. And I know that that's a strategy that homeowners are using now. They're also underinsuring their property or they're self-insuring. I mean, it's a serious situation, obviously. So structural changes are in order. And Ricardo Lara, the California Department of Insurance Commissioner, is planning some changes. And I'm just going to read them to you. I'm not sure if they're really going to make sense to any of us, but I'll read them to you. So, in agreement with insurance companies to write more policies and collectively offer coverage to at least 85% of homeowners in high wildfire risk areas. This would allow homeowners currently on the state's insurer of last resort, the FAIR plan, to transition back to the normal market, allowing insurance companies to use forward-looking climate catastrophe models instead of historical data about risk. 3, letting companies pass on California-related reinsurance costs, and increasing California Department of Insurance staffing to allow rate increases to be approved faster. So I just wanted to share just a little bit about the FAIR plan with you. Cal Matters reported this story in January. So the FAIR plan has exploded in size from 126,000 policies in 2018 to more than 350,000 today. And the FAIR plan offices are heavily impacted. And I was witness to that. It took me over 2 hours to get through on a hold line. It's pretty bad over there. Homeowners and insurance brokers say they are now facing problems such as delays in mortgage closings or homeowners losing their coverage. And the FAIR plan coverage is supposed to be temporary, but at this point, 90% of current customers are renewing their policies. The good news is that the FAIR plan does offer a 15% discount. Actually, it's 14.7% for homes that have defensible space and get inspected. So to make sense of all of this, we have Joel Laucher, who is a Moraga resident, and he's excellent. I've heard him speak before. I know you're going to really enjoy this. He worked as a commercial insurance underwriter before joining the California Department of Insurance in 1985. He started as a market conduct examiner. He went on to become the Division Chief of Market Conduct and of Consumer Services, Deputy Commissioner of Rate Regulation, and then Chief Deputy Commissioner under Commissioner Dave Jones. He is proud now to work for United Policyholders, which he'll tell you all about. It's a fantastic nonprofit that helps consumers with an array of insurance issues. So one little bit of housekeeping before we turn this over to Joel, which is questions. I'm going to ask you to hold your questions until the end. And because we have so many people here, well, actually, I don't know how many, but it's going to be difficult to find you all individually. I have 82 people here. So it's going to be difficult to single you out. I'm going to ask you to put your questions in the chat, and then I'll sort of run through and pick the ones that seem most pertinent and like that. So the plan is for Joel to give his presentation, and then we'll open it up to a Q&A at the end. All right, Joel, are you ready? You're not,
yes.
Wait, are you muted? You're not muted.
I'm not muted.
How did you end up not muted?
I unmuted myself.
You unmuted.
I don't know.
Okay.
The blanket mute did not hold.
I guess it doesn't hold. Okay, let me share my screen and we'll get started then.
Okay. Well, I'll just get started with the talking part. We'll have a PowerPoint in a second, but my sympathy to anybody who's spending their evening listening to someone talk about insurance voluntarily. Unfortunately, I'm not going to sell you anything. The one time you probably would want somebody to talk to you about insurance and sell you something. I want to just give you some information about the market. Oops, looks like
sorry, I just put this up. I want to get, oh, sorry. Okay. Sorry, everyone. This is my bad.
Just click at it.
Wait. How do I get to the?
You had it a moment ago.
I know, I did. Here we go. Is this it, Orinda? Orinda 2024. That should be it. Right?
That sounds good.
There's a close master button in the middle of the screen at the top. Click that.
What am I doing? There we go.
There we go.
Click the close master button at the top.
I don't know where that is. It's gone, I think. I just need to get rid of the side things. Okay.
There we go.
Okay. Thank you, everyone. Thanks for your patience. I'm going to mute myself.
Okay. So I'm going to talk about insurance options, although I'm using the word options very liberally here because most of us don't have many options right now. So the word limited applies a lot more closely and expensive. So next slide, please, Melanie. I work for United Policyholders, which is a nonprofit. That's why the admission charge tonight for all of you was so low. No charge, I assume. But I met representatives of United Policyholders when I worked with the Department of Insurance and was representing the department at events for people with wildfire losses. United Policyholders does a great job of assisting people through the entire claims process. And that's kind of been their focal point for since they were came into being right after the Oakland fire, tunnel fire of like 30 years ago now. Once I retired from the Department of Insurance, I was grateful that United Policyholders took me on board. Next slide, please. So the reality, I'm here. I got
You're
somehow
back.
kicked out of the meeting. I don't know why, but
okay.
I'm back. So ready to continue. Sorry about whatever happened there.
Okay, let me just get back to where we are. Here we are.
Okay.
All right, carry on.
So the reality of today is that if you do get non-renewed, it's likely to be very difficult to find replacement coverage. And whether you're non-renewed or seeking new coverage, premiums have gone up significantly statewide, essentially. Next slide, please. So there are homes that easily can find coverage. And so if you do this to your home, you will find it's not as challenging. Next slide, please. Or this, that works too. Next slide. But if you have a regular stick-built home, like most of us do, you know, things are tough. So some of the things we're telling people in this market is to be careful not to be too focused on saving money or by reducing your coverage. And unfortunately, even when insurance is more affordable than today, we find that sometimes 30–40% of people are well underinsured and don't have the funds to rebuild their home after a major loss. Luckily, the odds of this ever happening to anyone are very limited, even in today's, you know, risky marketplace. We're fortunate that there's a very slim chance your home will burn, but in the case it does, you will greatly regret not having something at least in the range of reasonable to rebuild your home. I find that many policies I look at with people that bring them to some of our presentations, the actual square foot cost that their limit reflects is less than $300 a square foot. It is very likely that anywhere in La Miranda that the cost to rebuild your home would be maybe $450 a square foot at a minimum, and climb steeply from there depending on, you know, what type of countertops and flooring and windows and all the things that greatly drive up the cost of a home. So at least check your coverage, make sure, you know, you are something, try and get an idea of what it would cost to rebuild your home, and try to at least approximate something close to that in your coverage limits. Next slide, please. The other thing we ask everyone to do, so these are just the kind of the basics of making sure your coverage is prepared to take work for you if you do have a loss, and that is to inventory your personal property. So generally, if you have a significant claim like a fire, you will have a payout, you know, for your dwelling and your personal property. But what you have to do to get your personal property claim paid is write down everything that you lost or was damaged in that fire, when you bought it, how much you paid for it, what condition it's in. It is a grueling task, especially if your whole home has burned down. And you know, the one thing you can do to prepare for it, of course, is make a list of everything you have and when you bought it in advance, and store that list somewhere off-site, like in a safe deposit box. That's pretty tedious to do too, on the off chance that you will ever lose your home. So we say, at the very least, a simple thing to do is walk through your home and take a video of everything in your home to at least remind you of everything you had, if you ever have such a loss, and to show as evidence to the insurer that you are not making these things up. So it means opening the cabinets in your kitchen. It means opening the drawers and closets throughout your house to film those things inside. You're going to remember you had a bed and a sofa, but there are tons of things of value that you will have forgotten about in the wake of having fire damage, that it is great to have at least a video to support your claim and refresh your memory of what you lost. Next slide, please. So a reality of today's market is that a lot of people are being non-renewed, and that can happen for a number of reasons, but the most common today is that insurers are rewriting their underwriting guidelines, their eligibility guidelines of who they want to offer coverage to or who they want to renew, to kind of thin their amount of wildfire risk. A lot of people think, well, my neighborhood doesn't have that much wildfire risk. There's never been a fire here, but insurers are looking at kind of models that show them, where historic fires have been, where a fire could be, and they're using other scoring models that identify, risk characteristics about the home that are used both in the eligibility process and in the rating plan. So if you're on a slope, if you're surrounded by a lot of vegetation, if you have a wood-shake roof, if you have single pane windows, all of these things kind of contribute towards a higher premium if you're fortunate, because otherwise they contribute towards a non-renewal. Some of the recent non-renewals are simply because the insurers are choosing to reduce their concentrations in areas where they've written a lot of policies. Now, this seems a little bit disingenuous in that many of these companies insert agents into our community. You can have a State Farm agent or two, farmers agents who are only selling for that one company, and they're essentially selling to anyone in town who meets the eligibility requirements. And then now that we have a wildfire risk, all of a sudden these same insurers don't want to write so much business in each town, right? So they want to limit their concentration, and they use various options of who they're going to non-renew. Can be the higher value homes, could be the homes with the higher scores than others that are in the same vicinity, could be the longer clients they've had, but they're allowed to change their underwriting guidelines to be more restrictive. And there you are. They have to give you notice. In today's market, it's 75 days notice. That's supposed to be enough to allow you to shop the marketplace. So at United Policyholders, if you go to uphelp.org, and actually you can see the address at the bottom of that little graphic, uphelp.org/dropped CA, we give you some quick tips on how to shop the market and how critical it is to get right on it. I know we kind of resent shopping for insurance. For most of us, it's kind of a one and done thing that we placed our coverage many years ago, and we kind of grudgingly pay our renewal premium without really checking out the policy or shopping around. Well, if you get non-renewed, obviously you have to shop around, and it is a chore. Next slide, please. So the California Department of Insurance also has some helpful information. One of the ones that I like, but that's because I happen to have written it, is the top 10 tips link. So if you go to the Department of Insurance website and you look up homeowners insurance or non-renewals, you can find your way to this page of kind of a number of generally helpful things about homeowners insurance. The top 10 tips, a couple of pieces of the information about that. It lists one of the links is a list of the 800 numbers of every insurer that writes homeowners insurance in California. And what you can do if you want to go through the effort is, and if you can't find coverage out there, with your local agent, is call the 800 number of every one of those insurers and ask if they can give you a quote, if they're a direct writer, or if they can refer you to a local agent. So shopping the market requires dealing with more than one agent. This is something I actually just talked to Melanie about. Any given agent typically only represents maybe 6 to 8 insurers, and fewer than that if they are a farmer's agent, and a State Farm agent may not even represent any other insurers. So a lot of agents, if you get non-renewed, and you go to your agent and say, can you shop around, and they don't find coverage for you, they're going to say, I can place you in the FAIR plan. But my advice is that you contact other agents, because they're going to represent other insurers. I recently replaced my coverage with a traveler's policy. So travelers happen to be still writing coverage, but you don't know who a traveler's agent is until you call several agents. There are several agents in Lafayette and Orinda and Moraga for you to start with, but this is kind of the thing, is check marking who you've contacted, who they represented, and try the next agent. But my advice is to not sell for a FAIR plan policy until you've done as exhaustive a search as you're willing to do. And we all have our threshold for how much insurance shopping we can stand before we give up and settle for a FAIR plan policy. But you could save potentially a lot of money by finding coverage that might be elusive with another carrier. So next slide, please. So the FAIR plan, just in case you do get placed there after a non-renewal, it's basic property coverage. And here it takes basic at its kind of lowest value, meaning it's basically fire insurance, because it doesn't even include water damage, much less liability coverages and other important coverages that a homeowner's policy has. So if you get a FAIR plan policy, you're going to need what's called a difference in conditions policy, sometimes called a DIC, sometimes called a wraparound, to get those additional essential coverages, such as water damage, which happens to be the second most likely type of claim people have than fire, and liability coverage, which rarely has any claims, but when it does, it's very important to have. So if you do end up with a FAIR plan policy, make sure you get the wraparound. And also, just because you've ended up in the FAIR plan after doing a search of the market, don't give up your search. Maybe you exhausted your willingness to go through it, but pick it up maybe 2 or 3 months later and do another round of searching. Some insurer or agent that wasn't writing new business when you tried the first time might have had some non-renewals that it's willing to replace. So you never know, or maybe try different agents. So I would hope nobody just stays with the FAIR plan and assumes that is kind of their destiny from now on. Keep shopping the market on intervals. Just put a couple hours aside to make that effort every couple months, and maybe you get out of the FAIR plan. Next slide, please. So, I mentioned how insurers kind of underwrite properties, or how they determine eligibility. A lot of it is based on wildfire scores. Those weren't a thing 20 years ago. today, they're kind of the main driver of all the eligibility rules. And obviously, there's going to be a difference in terms of wildfire scores in someone that's on a hillside that has a lot of forest or brush exposure versus a downtown location. So a zip code in Orinda is likely to have a much different rate and eligibility profile than one in Walnut Creek. Next slide, please. In fact, if you look at State Farm's recently approved rate increase, which was 20%, and you look at it by zip codes, and I think is Orinda 94563. I think you have a couple zip codes, but you can see what I've kind of highlighted in this red box over to the right where it says average rate impact. If you can read that, there's a list of numbers: 13.3%, 12.6% in that kind of in that red box area in the fourth column. Well, that means that on average, the people in those zip codes paid 12 to 17% rate increases. The 20% State Farm increase is the average across all communities. So I did another one of these presentations a couple of weeks ago up in Chemaquita Park. If any of you are familiar with the drive over the hill from Los Gatos, which is my hometown, to Santa Cruz, there's a community there called Chemaquita Park up in the Redwoods. Their average increase from the same State Farm rate change was about 35%. So some are getting lower increases, some much higher. And even though these percentages we see here are the average for those zip codes. So somebody in this Orinda zip code might have gotten a 5% increase, and somebody might have gotten a 25% increase. But overall, Orinda is doing a lot better than Chemaquita Park. I will say that. Next slide, please. So, the keys to insurance are make sure you have reasonably high coverage A limits to be able to rebuild your home or, approximate that. Most standard coverages today include replacement cost coverage, not actual cash value, that ACV. But you do have to make sure you're choosing the higher coverages if you have a fair plan policy. Extended replacement cost is a standard in homeowners policy. Building code upgrade is a hugely important component of a homeowners policy. It's usually 10 to 15% of your dwelling limits, and that's because most of our homes, if they were built, for example, like mine in the 60s, will need a lot of different components than it did at that time to rebuild. And the coverage limit that the insurer places on your home is the cost to rebuild what's there today, not the cost to rebuild what you will have to build if you rebuild after a total loss, like up to current codes. But those policies do provide typically that 10% building code upgrade percentage to at least get you close. So adequate dwelling limits. And if you own any particular valuables like art, jewelry, business property, there are usually very low sub limits on those things. Could be $2,500 for jewelry or $5,000. It could be $2,000 for art and $1,000 for business property. If any of those things, if you own more valuable possessions, you need to typically for jewelry schedule it on a separate floater or part of your homeowner's policy, but as scheduled at an appraised value in order to get the insurance reimbursement for those limits. And know that no homeowner's policy in California will cover flood or earthquake, mold, or earth movement. And that commonly is like mud flow, for example, in our region can be an issue, and obviously earthquake. For earthquake and earth movement, you typically have to buy an earthquake policy. I don't know how you get mold covered, but flood also requires a separate flood coverage. Next slide, please. So to save money, most of us are just feeling fortunate to have our coverage, but you really have to do a thorough market search, do as much mitigation as you can. So there are a list of discounts. I don't know if I have them on this PowerPoint that you can get if you do all the mitigations that are on that list. Those are things like, modern ember resistant vents and double pane windows and not having a wood shake roof and having a 5-foot risk-free zone. Oh, here we do. We have those.
Sorry,
okay.
I'm
No,
sorry.
that's good.
Wait.
That's okay. I'll just add, since we're going to have those. Raise your deductible to whatever amount. That's fine. That's fine. Raise your deductible to whatever limit you can afford to take a loss without using your insurance. So a lot of us, if you've purchased your insurance 20 years ago when $500 was a high deductible, take a look at that again, because you might have left that in place for 20 years. You want to move that deductible way up, 5,000, 10,000, whatever you're willing to kind of put at risk out of your own pocket, because that will save you money. And the reality is you're not going to want to file a small claim in this market. You'll probably lose a loss-free discount, and you could get non-renewed if that claim the insurer thinks is indicative of some failure to maintain the home or indicative of some other risk that they weren't aware of on or near your property. So only use your insurance policy when you absolutely need to, and that means you might as well have a high deductible to get at least a discount for not using that policy. Next slide, please. So Firewise USA is a good thing, but there's a discount for that. And then there's a discount for many home mitigations. So next slide, please, Melanie. Things I was mentioning, such as clearing out from under decks, having that 5-foot free zone of any combustible materials, which I currently am guilty of, having a wood fence that connects to my home on either side of my home. I haven't dealt with that yet because it's a pain to deal with, but I'm hoping to do it. No combustible structures within 30 feet of your home. Most of us, or at least to the area you control. For many of us, we don't have 30 feet that we own on either side. Next slide, please. Class A roof, almost everyone has that today, but if you have a wood shake roof, that's going to cost you. Enclosed eaves is a challenge if your roof kind of hangs over your house and isn't enclosed to frame off, square that eave area that supposedly sparks gather in, but that's a challenging one. Fire resistant vents, however, is a pretty easy one to deal with. You either buy new vents at Home Depot. Sometimes the fire department makes the mesh available. I actually did that. Remeshed all my old vents with a tighter screen just by buying a roll of stainless steel mesh and cutting it out with tin snippers. So multi-pane windows are, of course, almost every home in La Miranda has those, but that's a key. And 6 inches of non-combustible clearance above the bottom of your home, right to where your foundation is. You want to have clearance, not anything wooden up against your home including siding of your home at least 6 inches from the ground. Next slide, please. So all you can do to and here's some kind of pictures that are helpful. There you see somebody actually has a wrought iron gate. That's what I need to do. Most of us still have those wooden gates. But these are some steps that you can do aligned with those discounts. You know, a lot of them, some of them you can do yourself. A lot of them you need someone to help you with. But if you've done any of these things, you need to report that to your insurer, because these discounts with many insurers only came into play in the last few months. And there are many insurers that still don't have them in place yet, but will, because the law has mandated it, but their filings are pending to provide those discounts in the rating plan. So if you've done any of these things, contact your agent and get the discounts. Also, you know, it's good to note that everything you do to protect your home is, and Firewise people know this, is an act of kindness to those in your neighborhood. Because what we do to protect our property starts to build herd immunity in the case of a fire, and slows the transmission of fire if we can reduce the risk at our home, and our neighbors do the same. I think I'm preaching to the choir here. Next slide, please. Again, we have some resources listed at the United Policyholders website. You can click on, this one happens to show Santa Clara County because I was just there, but Contra Costa County also has a webpage on the UP site, and they will identify whatever resources have come to their attention that you can make good use of. Next slide, please. And there are also state guides. Listos is a California generated source of great information on how to prepare for disasters. They have a great disaster ready guide. So go online at listoscalifornia.org. Also free advice, no sales pitches, just from your wonderful state of California to you, and very useful information. Next slide, please. And that's it for my PowerPoint. You know, check us out if you need any information, and you're welcome to reach out. We have a expert question answering component at our website. And if you have any questions now, I will do my best to answer them.
Okay, great. Thanks, Joel. Sorry about the weird shenanigans there, everyone.
No problem.
I obviously do not do this often enough. Let's see, here's Heather. You sounds like you're super frustrated. You were at State Farm for 35 years with no claims, and you got non-renewed. They they asked you to drop a bunch of money in order to be renewed. You did, and they are still not happy. I'm at my wit's end. What does that mean, and what can she do, Joel?
Yeah, so as I mentioned, unfortunately, insurers can kind of tighten their underwriting guidelines at any point in time, and then apply those new rules as long as they do it consistently, and as long as the new rules are risk-related changes. So a lot of the homes that State Farm might have written, you know, years ago no longer qualify to stay on the books unless you can make the changes necessary to be consistent with their underwriting rules. Now, when they send out a non-renewal notice, they have to specify the reasons for that notice. And if you make those corrections, then they should renew you if you make those corrections before your renewal date. So I guess the question is, did you do that? And if you did, Yeah.
do you want to, Heather, do you want to go ahead and respond to that? I mean, I can tell you, we tried to do that and Farmers was just not having any of it. They just completely ignored us. And, meanwhile, the clock is ticking. So anyway, but Heather, did you ask them?
Yeah, what happened is I couldn't get fire insurance through State Farm anymore or through Farmers. And so they put me on the list of the cheapest one possible, the State Insurance Fund. And the State Insurance Fund came back and they said, okay, if you put $9,000 on your gutters and if you cut down all your trees so that you look like you live in, I don't know, Tracy, and you, and you cut back all of your stuff, then we will most likely renew you for next year, not State Farm, but the fire, the lease, the fire exchange. And so I did all that stuff. I spent $20,000 and did all that stuff. And they came back to me and said, you didn't do it good enough. We want you to take all the fences that you have, that you've put up, and we want you to put metal between them. And my neighbors went, they're not signing up for that. And I can't afford it anymore. And I'm thinking about just not getting insurance next year because I can't afford it.
Okay, well, first I'd say that of course you can't go without insurance if you have a mortgage. Maybe you don't. Your mortgage company will place insurance that's even less effective and more expensive in many cases than your fire coverage today. It doesn't sound like the FAIR plan that you're with to me, because they have to take you no matter what your property looks like, unless it actually, unless you heaped sagebrush up against your home or something.
Yeah, no, I live in the middle of a renda with 4 corners. I mean,
okay, well, so one thing in terms of the fence itself, to my knowledge, no insurer requires any metal fencing other than those last 5 feet that join to your home. So, that's why you can have a wooden fence that reaches all around, but to break the spread of the fire from the fence to your home, those last 5 feet need to be non-combustible, typically metal or something. But not the whole fence. And, again, I don't know what insurer that is, but it doesn't sound like the FAIR plan, because they would write you with a wooden fence.
Well, they told me they weren't going to renew me in April, and now I'm freaking out.
Okay, so I think what would be best. So do you have an agent that you're working with?
I do, and he came back with a $6,000 a year fire insurance policy that, I live alone and there's no possible way I can afford that.
Okay, so one thing I'd say, and I said this earlier to Melanie, you probably need to work with more than one agent.
Yeah.
But your agent should be able to explain a lot better what the insurer needs of you. For example, if you thought you needed a metal fence, that's not a reality typically. So they should be explaining exactly what you need to do, but you may need to talk to multiple agents to find coverage elsewhere. Any one agent, again, I would say, represents less than 10 insurers, usually 3 or 4 or 5 that they do most of their business with. And there are like 80 insurers that write homeowners business. Some of them are a lot less known, but you want to try different agents. And maybe somebody in the Firewise community there in Orinda can help you if you reach out to them to take a look at your property and identify the things that are kind of the things to focus on.
Yeah, actually, Joel, I'll just jump in there. There is Moraga Orinda Fire Department has their FAC A program, which is the volunteers which will come to your house and do exactly what you're saying for free. You just would go to mofd.org and, you know, root around there and you'll find it. And I also, while I'm at it, I see I'm not sure if Zoom cuts off itself at 8 or not. So I'm a little worried about questions. Would you feel comfortable moving on at this point to the
I
next
would,
one?
yeah.
Okay, Heather, yeah, if you just email me, or you can, if you have any other questions. Jack Kelly asks, is there any world in which we could be able to form an insurance co-op to protect ourselves? Joel, is that even a dream worth having?
Well, I would say if you don't have a mortgage, so you own your property outright and aren't then obligated to have insurance, you could do that. But, you know, just like insurance companies don't want a concentration of risk, you would want your 9 fellow members of your co-op to be located in totally different communities, so your homes don't all go up in the same fire should it ever happen. So you would need to spread the risk too. You know, again, it's pretty tough to have that work.
But it's a good idea. Brett, and it's sort of like those self-insuring health groups. I forget what they're called. One of the things here, Brett Ann gives us a tip. One of the things that a lot of insurance companies are looking for now is for you to get wildfire prepared home certified. This is a program through IBHS. I forget what that stands for, but you can do a search.
Yeah, and that is basically the same set of standards, that set of discounts that I showed you, that the Department of Insurance is requiring insurers to give discounts for. They almost align 1-for-1 with those IBHS program. So if you're doing those measures, you might as well get IBHS certified. And you know, you'll get a discount for each one of them individually that you do, so you don't even have to get them all done before you start getting discounts. But you have to tell your agent or your insurer that you've done the work.
Oh, that's a really great idea. Okay. John Kenny writes, if a whole chunk of homes in an area get non-renewed, can a particular home argue they are less or much less risky? Oh,
yes.
Right.
Yeah, it's possible. I mean, a lot of homes in a given area, currently today, a lot of people who live on a wooded slope type environment that we have a lot of in La Miranda, for example, and all through the Bay Area, are going to be targeted for non-renewal. And because of a score that's from a wildfire risk identifier. The insurer may or may not be willing to consider other actions you take to have made your risk less than those other homes. So if you've done the IBHS work, for example, right, you would contact your agent. The reason you get a 75-day notice of non-renewal is to give you time to both shop the market and to ask your agent or insurer, is there anything I can do to reverse this non-renewal notice? And you should try and do everything you possibly can, given how difficult it is to find a new carrier today. But, you know, it's the best you can do. The best you can do is all you can do, right? So, so do everything you can within your power, shop the market as best you can within your tolerance level. But otherwise, you know, you can end up with the California Fair Plan, which is less coverage for more money. And you need to buy a companion policy to go with it.
Great. So Terry Lowenthal, yep, she's telling us that their insurance in their non-renewal statement included that they were in an area with a history of wildfires, and so they just don't want to renew. And yes, I think Joel's covered that. Whitney Kwan writes, working with a few brokers, insurance agents, because we got our non-renewal from Travelers. We have received some ridiculous quotes. And she's wondering, people want to push them to the FAIR plan. Is that laziness on the agent side, or is it really their only option? I think you kind of alluded to that in your talk, that you just need to be aggressive and shop the different agents.
Yeah, I would say two things. One, agents, again, represent only a few companies of the many companies that are out there. Two, there's something called non-admitted or surplus lines carriers whose rates are not regulated at all. So their pricing could be quadruple, what you might have been paying before. But they may be your only option. And they could be better still than the FAIR plan, but you don't have the backing, financial backing that an admitted carrier has. And it's hard to kind of explain all these terms, but the kind of known companies that we have, Farmers, State Farm, and Travelers, and all of those are admitted carriers who solvency is supported through the state assessment on insurers, or actually insurers assessing themselves. But surplus lines carriers are another thing, less protection, but many of them are well financed, but they can charge whatever they want. It still could be better than the FAIR plan.
Okay, and then
but you have to shop with multiple agents.
Jim McKee asks, any comments about the impact of recently passed AB 38 and the significance of inspections for sellers to attract buyers? Are you familiar with AB 38?
No.
Jim, are you here still? Do you want to
Yes, I
mention?
am. Can you hear me, Melanie?
Yes, we can
Yeah,
hear you.
hi, Joel. Thank you very much for this presentation. This is really helpful. I'm actually writing a piece for our Happy Valley area regarding AB 38, which has provisions for fire inspections or house inspections. And one of the selling points that I'm making is if you get this, if you adhere to the terms of AB 38, which is basically Firewise protocol, you're going to be able to tell indicate to your buyer that you're going to have less challenge with getting insurance. So that the question to you is are you maybe you've already answered it. You're not even aware of AB 38. So it hasn't had an impact, I guess.
I would say
this is for when you're buying and selling a home, right? This is not, okay.
That is correct.
Okay. Thank you,
Yeah,
Jim.
and so
Thank you.
like an IBHS designation, it sounds like it can be a positive. It's, just so people know, even if you do these things, an insurer doesn't have to write coverage. It could, those features can be great. And it still says, oh, you're in a fire area, I'm not going to write you. Same probably with compliance with that new law. You can do those things, but nothing is a guarantee of coverage except your eligibility for the FAIR plan. So, small solace.
All right. Thank you very much.
Okay,
Sure.
and a list of insurers. I think you referred them to the CDI site, right? Where they have
Top 10 list. Yeah, you go under homeowners insurance and you'll find a top 10 list on their website, and included on those are a lot of a different link to find different things, coverage comparisons, that type of thing. But there's the 800 number list of every insurer that does admitted insurer that does business in California.
Okay, and here's Terry writes again, just letting us know that there is a thing called Wildfire Prepared Plus designation, which is a category for new construction or major renovations. James Duff gives us suggests a site called wildfireprepared.org. And then John May wonders, as we all are wondering, if you're in a Firewise neighborhood, is that more likely to get an insurance renewal?
It's a mandatory discount now, but again, it isn't. I don't know. It can help. I'd say if an insurer chooses to have it help, but a lot of insurers may not, the first kind of filter most homes pass through is this scoring mechanism of the home and the surrounding area. So some of it doesn't even get to your actual specific home features before you don't make the cut. For the insurers that you make it through that filter, then everything you've done, including being part of a Firewise community, is helpful.
Okay, and then yes, right. The provisions, yeah, we in the Moraga Orinda fire code, there's a whole protocol for houses being sold and bought. So the AB 38 is not that relevant for us. And Brett Ann also, this is sort of a commercial thing here. She's working for a company called Madronas, and they will help people protect your homes and businesses and help you so that you can get affordable insurance. So I guess they'll help you. They'll assess your home and do the work, the mitigation work, it sounds like. So there's that. And then another thing from Brett, this is the volunteer program. Okay, remember I was talking about the FAC-A thing? So here's the link in our chat for that at MOFD. So it's complicated. Their website is difficult to navigate, but that is that. And so with that, we have come to the end of our questions. And we've also come to the end of our hour. If there's any last minute burning questions, we can take one more question. I don't see anything here. Oh, here's one. Can I determine what the quote score is for my home and neighborhood? Is that private information for insurers?
Generally, you can't determine, but there are new rules that will require them to tell you your score. And I will say on most of these models, each home in a neighborhood might have a slightly different score as you go steeper up the hill or further away from the hydrant or closer to the green space that's at the crown of the hill, or the home can have a different, significantly different score than a home 5 homes away. And it really, it has changed those scoring to include some considerations of things at your home. I will say years ago, none of the individual things you have done would matter. But for example, in one of the tools that insurers use, it's called Zesty, I've done some work for, they can tell if there are branches over your home, limbs of trees. That's a no-no, right? If you can get rid of that. They know the year built of your home, so they actually know if you have dual pane windows and ember-resistant vents. So if you need to tell your insurer if you have an older home that you have ember-resistant vents. But some of the scoring does take into account some of these features, like your clearance around your home, roof type, windows, gutters, that type of thing. So those things you can control, and other things about your score you can't control at all, like slope and access and degree of brush. Usually it takes a community effort to impact density of brush or vegetation issues, which Firewise communities could act on that.
Great. Okay, well, I just want to say thank you so much to all of you for coming. It was really very helpful to me. I learned a lot again, and I wanted to do a special shout out to you, Joel. I really appreciate you taking the time on a weeknight evening to come and speak to us. And if people want to follow up, I guess they should just go to uphelp.org.
Yeah, and they can write to UpHelp, and I don't know if you want to receive emails from your neighbors that you can forward to me. They're welcome to do that if you want. I don't know, but uphelp.org. If you get follow-up questions, Melanie, I'd be glad to respond to any you get or come back at another time.
Okay, great. Okay, thank you so much. I really appreciate it. Thanks for coming, everybody, and we'll see you next time when we do another webinar. All right, good evening. Take care. Bye-bye.
Thanks a lot,
Bye.
Melanie.